Hey, it's Soleil, and this is episode 146 of the Orange Pill Investor, and today I want to talk about dead-end stocks. Dividend stocks. And I follow a few accounts, and a lot of times the engagement questions will be like, how many millions of dollars does it take to retire? And I mean, it seems like the average that people are saying now is like $5 million. And I guess maybe what do they count that? Are they counting on getting like 10-15% or something of getting like, and then you're gonna live on 50 grand? I don't know. Some dividend folks, please correct me. I asked Grok, how much dividend stocks make, and he was kind of non-committal. But it just kind of amazes me how people will be like, oh yeah, 5 mil minimum, and that just seems ridiculous to me, because if somebody told any of these dividend investors, hey, I got this dividend stock and it pays 1% a frickin' week, what would they do? They'd basically cream their jeans. Like, there would just be a mad rush, and no one would own any other dividend stock. Just getting 1% a week. That's 52% for the year. And that's what I get, like base, bargain, easy peasy, 1% a week selling covered calls. Now, granted, I guess there's a chance that some dividend stock could have unlimited upside, but last time I checked, a dividend basically means that the company has thrown in the towel. They're basically admitting they have no imagination. They can't figure out how to deliver value to their shareholders. So they can't figure out how to make new products. They're not building factories and gigacastings like Tesla. They're not taking over the online sales world like Amazon did. They don't have any ideas like the iPhone disrupting personal computing. They've basically just given up. And they're telling you that you're probably smarter than they are, because here's the money. Here's the money that I should be using to create more value for you, the shareholder, but I'm too dumb. And there's a lot of talk about these Bitcoin development companies following Michael Saylor's playbook. SMLR is the most recent, and there's a lot of hype around it. But I wonder if that's available to everyone. Are there any? I think there is a dividend ETF or something around selling Bitcoin covered calls. I need to take a look at that again. But I'm just talking about like regular companies that offer a dividend. If they just tried Michael Saylor's playbook, would they be able to turn their company from kind of a shit show that doesn't know how to provide value for the shareholder, other than just handing it back to them and saying, I hope you know how to invest this better than me? Would it work for companies that are already offering a dividend? I know MicroStrategy did it in lieu of a dividend because he was trying to figure out what to do with this money that's being debased by inflation. And they actually discussed it, and they thought, okay, well, we can either just give it as a dividend and admit defeat, or do buybacks and our company just dies slower with any of these other options. But I take this into my own hands, and I'm not even going to use MicroStrategy because that's out of reach for some people. But let's just look at Mara. And there's only 3 trading days until Friday, so this isn't even a full week's worth of premium. But if I owned 100 shares of MAR, which I do, and if I sold, even with only 3 days left, if I sold a short covered call, I could get 1%. I could get over 1% at the 22 strike, which is leaving $1.50 in call away value here. So I don't understand what is so complicated. And like, this strategy is not even like unique or anything. This is not like it's hard to find. I mean, I found it 4 years ago when a guy told me I needed to I need to start looking at these options contracts. And so I went out on YouTube and I found a bunch of Tasty Trade videos, and In the Money is the other good YouTube channel. And I just kind of landed on covered calls and the wheel strategy and selling cash secured puts, and I'm like, this is like, people talk about how dangerous options are, and I'm like, this is the safest trade maybe in the stock market. Because people probably just think, oh, buying and holding an index fund is the safest. But this is buying and holding stock and then immediately reducing your cost basis, and then reducing it again the next week, and reducing it again the next week, and reducing it again the next week. So you're giving yourself a discount off the share price every time you collect premium and limit your upside. And that's the other part that people don't like. So I guess I get that, and that's probably one of the most common complaints. People say, oh, you're limiting your upside. But what upside is there in a dividend stock? Anyway, these stocks are not like going to the moon overnight. Maybe Apple. I guess if there was some amazing Apple news, I think they just started offering a dividend. But I can't imagine that most of Apple's value is in their dividend. I would assume it's from their iPhone sales, but maybe I'm wrong. But I know damn well if there was a dividend stock out there that offered 1% dividends a week, and it could still go up 10% a week, if they just said, you know what, here's this dividend stock, it's going to give you 1% a week, however, it's at $100 a share now, and it can only go up max $10 a week. Like, that's still freaking amazeballs. There's no way any of these dividend investors would not just be over the moon for a stock like that. But yet that's available in almost any stock you can imagine. Like, it's not easy to get in an Apple, which is one reason I don't trade it. The premium kind of sucks. But for 3 days, you can get like 0.5%, a little over 0.5%. 0.5% a week is 26% a year. I mean, that's pretty legit. You wouldn't be able to get any call away value at this, but maybe for next week. How much can we get for next week? 10 trading days. So you could get, you could get 1% here at the 197 strike. Got like $3 worth of call away value in it, so not much. But I mean, Apple is a terrible covered call play, in my opinion. So I don't trade it. But this is available in any stock. Let's see, SPY I think only gets like 0.5% a week. So what's 7 trading days? Boom. You can get like 0.5% here. It's like $1 call away value. The point is, and actually selling covered calls in this, you could probably collect the dividends. Don't SPY pay dividends too? So dividend investors, I need your hate in the comments below, and explain why collecting whatever the hell amount of dividend you collect is preferable to getting that much a week. No, that's an exaggeration. You're not just getting 1% a year, but I don't know. The S&P is like 10% a year, right? So dividends can't be that much more amazing than the S&P, or otherwise no one would own the S&P. So I'm going to guess that a really good dividend return is probably 10% a year. If there's a dividend out there paying more than 10%, it's got to be damn popular, or somehow has some kind of risk. There's got to be some additional risk that people are afraid of it. I got to imagine that the best dividend returns approximate the S&P 500, because it takes no skill whatsoever to just buy it and sit on it. There's got to be a premium for people willing to do a little bit of research, click a few buttons, put some capital at risk, make some trade-offs. Like, how much do you expect, how much do you think you should really be paid to sit on your hands and do jack shit? Index fund investing should not pay you that much, and that's why it doesn't. It basically just paces inflation. If you basically want to wipe out inflation and put money under your mattress, and then when you go back under the mattress, inflation hasn't reduced your buying power at all, then you want the S&P 500, and I'm assuming probably dividend stocks. I'm just going to make that guess right now that dividends pay about the same as just investing in the VOO or the S&P 500. So why wouldn't you want 52% returns? Somebody explain it to me, because I don't get it. All right. I'll briefly talk about HUT. So the two winners of the 100 shares each, one decided to go ahead and do the 100 shares. Not this one, this one. And I think we sold the the 8.5. With this one? Yeah. So we sold the 8, got paid 28, and now HUT is on a tear a little bit, so we should probably roll this early. One investor decided to go ahead and sell a put. The other one actually owns the shares, and I think we sold the 10. I think I have that on Robinhood. Yeah, sold the $10 call. And it's either way is completely fine. Now, I sold this one and got paid 8, which was approximately 1% at the time. And it allowed for about 10% call away, which we may use. We may be using all of that. All right, so that's just an update on those. And somebody explain dividends to me. All right, be good, Joel.